Can bonds make you rich? Probably not overnight. But what if we told you some of the world's wealthiest investors still buy them anyway? When most people think about investing, they think about stocks. Fast-growing companies, big returns, life-changing gains. But bonds play a completely different role. When you buy a bond, you're essentially lending money to a government or company. In return, they pay you interest and promise to return your money later. That sounds boring. And honestly, it kind of is. But boring can be powerful. Let's say you invest 100,000 pesos in a bond paying 5% per year. That would generate 5,000 pesos in annual interest. But in the Philippines, interest income is generally subject to a 20% withholding tax. So after taxes, you would keep about 4,000 pesos per year, or roughly 333 pesos per month. Over 10 years, that's around 40,000 pesos in after-tax interest. And at maturity, you would typically get your original 100,000 pesos back. Will that make you rich overnight? No, but bonds were never designed to be lottery tickets. They are designed to generate income, reduce volatility, and help protect your portfolio when markets become uncertain. That's why many retirees, institutions, and even billionaire investors keep bonds in their portfolios. Not because bonds usually create the biggest gains, but because they can help preserve wealth. Of course, bonds are not risk-free. Interest rates, inflation, and credit risk can affect returns. And over very long periods, stocks have historically outperformed bonds, which is why many investors use both. Stocks for growth, bonds for stability. So the real question is not, can bonds make you rich? The real question is, does every peso in your portfolio need to chase maximum returns? Or should some of it be earning steady income while helping protect your wealth?